Bank of Canada becoming the first central bank in the G7 to kick off an easing cycle, cutting that benchmark lending rate by 1/4 of a percentage point to 4.75%. And the cut was widely expected. We did see some selling, though, in our currency, the Canadian dollar. It's up from its lows of the day, though. You can see it's managed to get up above 73 cents US. Let's bring in Beata Caranci, Chief Economist at TD Bank. Thank you very much indeed for joining us.
Oh, my pleasure.
Your view, or the view of you and your colleagues, if I can characterize it, is that we needn't necessarily expect another cut next month.
Yeah, so the Bank of Canada meetings are scheduled about 6 weeks apart, and typically, once they start a rate hike or a rate cut cycle, they keep going. It's not a one and done phenomena. But I think what many people are judging is, given their caution around inflation, that you're not seeing the same dynamics play through in the U.S. That, as you mentioned, the currency is low. There's a possibility of importing inflation. That the Bank of Canada may want to be extra cautious of going at every other meeting, so 12-week intervals, which means at most you would get a total of 75 basis points in cuts, with 25 delivered today, so only 2 more cuts. And that's basically what the market is pricing. They're pricing a September and December cut. Doesn't mean that's the way the Bank of Canada will move, but that's basically how they're receiving the information that they delivered today.
And presumably one of Mr. Macklem's worries here is an undue rebound in the housing market.
Yeah, I think that's got to be one of their biggest concerns, because when you look at the share of items that are rising by more than 3% price growth, and it's holding inflation higher than otherwise, it's all shelter. And so if that really starts to reaccelerate, that's going to lift up their inflation metric, irrespective of what's happening with the rest of the items. So that's going to be a concern of theirs. And they also mentioned some other areas, like having geopolitical tensions place pressure back on supply chains. Up until now, all this downdraft that we've been getting in inflation has been largely concentrated in goods, which are tradable items that we're shipping in. Should that be disrupted, that would be another source of inflationary pressure.
And is it a big deal for Mr. Macklem and his colleagues? You touched on this. If our currency goes down, we start importing inflation, so we have to pay more for our imports. Is that a big worry for Mr. Macklem as well, a weaker Canadian dollar?
Not at this time. I would say that what we have seen on the Canadian dollar is tremendous amount of stability. It's been what we would say is range bound between 72 cents on the bottom end, 76 cents on the upper end, and that's been the case for about 2 years. So it's bouncing in that range. I don't think they would really worry about it until it hits about 70 cents and runs the risk of having a 6 handle in front of it. At that point, you would worry that, foreign investors wouldn't be overly interested in Canada if the interest rate spread gets too wide relative to the U.S. Our own research suggests that they could probably spread the policy rate at max 125 basis points to the U.S.
Oh.
Again, this is one of the reasons people are only pricing in another 2 more cuts, because there's a little bit of a concern. If you get to 150, 175 basis point spread, you will get a currency that breaches below 70 cents.
But you think that we could have a gap of 1.25 percentage points between Canadian and U.S. rates?
Well, we're already at 75, and we at TD don't anticipate the Federal Reserve will cut rates till December. So for about 1 month, there will be this 125 basis point spread, provided the Federal Reserve delivers in December. Now, markets are anticipating that the Fed may deliver as early as September, in which case you don't get that wide of a spread. You would spread no more than 100 basis points. But those are the limits, 100 to 125 as the maximum spreads.
One thing that obviously the central bankers have to try to figure out is how much inflation comes from an overheated economy, how much comes from lack of corporate competition. Has Mr. Macklem, I guess, has steered clear of that, hasn't he? Any arguments that we have excessive market concentration in Canada, for example, in food retailing?
Yes. Yeah, and in fact, you could argue the opposite. Our inflation metrics are doing better than the U.S., which is a highly competitive market. So we have been able to get inflation down. The real difference has been that the U.S. has stickiness in service prices, which is driven by their high consumer spending profiles. And in Canada, we've started to see a rolling over of service prices, except for areas of shelter. So we've had a little bit more improvement than they've seen on the U.S. side. And what we're attributing that to, and what the Bank of Canada is saying, is that's because our growth has been much slower than the US. So we're building up excess supply. So capacity is rising in the country relative to demand. And that's that's creating a competitive advantage for consumers, because now companies have to compete for your business. And so that's the environment we're in.
What is your base case for the economy? Are we at risk of an actual recession in this country?
Always at risk. It's never zero. But I would say it's a fairly low risk right now. We still have pretty decent consumer spending that was at 3% in the first quarter. Now, it was tapering as the quarter came to an end. We don't think we'll get as strong a profile in the second quarter. But with the degree of population growth we're seeing in Canada, it's going to be tough to really throw yourself into a recession as long as we continue to see an inflow of people who are going to need clothing, housing, electronics. And so that's a big factor we think is helping to hold up the economy as we move forward. So I would say, if I were to put a probability on it, maybe about a 30% risk that we move towards a recession. But right now, it's not the dominant view.